home prices rose nationwide in 2025, but Florida faltered. What's dragging Florida's market down, and what's coming? Welcome to Dre's Take. Hey folks, today the FHFA Home Price Index for 2025 is in, and for most of the nation, home prices have risen modestly, about 1.8%. But Florida saw just the opposite, a 2.7% decline. What's going on? Well, first, it's important to note that real estate is very hyper-local, and these numbers are in aggregate. Now, those of us in real estate know, and many of you are savvy enough to know as well, that home values and prices can vary from subdivision to subdivision, county to county, city to city, zip code to zip code. It's very, very hyper-local. So although you may see some cities that have declines across the board, you may have pockets or zip codes or subdivisions within that city that are performing very well. In Orlando, for example, areas like Dr. Phillips and Audubon Park were ranked as some of the hottest zip codes in the nation, well above the national average, while areas like downtown Orlando and Winter Park saw just the opposite. In particular, if we head to Southwest Florida and look at cities like Cape Coral, which saw massive growth right after the pandemic, prices are now correcting due to oversupply by builders who were rushing to meet demand. And when those rates rose, they got stuck holding all that inventory. That surge of inventory is causing one of the harsher corrections in the nation, about a 9% decline in Cape Coral. When cities like Cape Coral and other supply-rich cities, along with the condo market, which was basically decimated over the last few years after the condo association reforms, are accounted for, it can really weigh down that aggregate number statewide. So Dre's Take? Talk to an expert. Don't just read the headline and take the aggregate generalized number and make generalizations about the market in whole. Contacting an agent such as myself, we can look into your specific neighborhood, zip code, etc., and really figure out what's going on in your neck of the woods. And that may be quite contrary to what you're reading in the headlines. Going forward, it looks like mortgage rates have stabilized at about 6% for the time being, increasing purchasing power by about $30,000 for your average buyer. And the increased supply or inventory situation in most markets is giving buyers the upper hand and a little bit more negotiating power. With inflation ticking up slightly and the renewed pressure as far as tariffs are concerned, I personally don't believe that we'll see an interest rate reduction from the Fed at their next meeting. Polymarket still shows about a 96% favorability for that belief. But I do believe that the Fed is likely to reduce interest rates further throughout 2026. Both Realtor.com and Zillow forecast for mortgage rates to decline throughout 2026. This should help bring more demand back into the market and stabilize pretty much all markets, including those that have been the hardest hit. So if you're in one of those markets, just hold tight. If you're a buyer, strike while the iron's hot. If I can help you out in any way, I'm just a call away. And until next week, that's Dre's Take. All right, y'all. Take care.